Well, how low can real estate prices go? My suggestion is go ask Jerry Powell because this is absolutely engineered by the Federal Reserve. Now, I don't think prices are going to get down below cost, but they're heading further south. So we've got a pretty good buying opportunity coming, but a lot of people are going to be very, very unhappy. So let's just go to my very first slide and see what we can do about this. Now, for the very first time in 10 and a half years, we actually have prices decline nationally. Now, I think in some of the smaller towns, I'm going to pick on Boise here because Boise's been in the news as being one of the most overpriced places in the United States. We've got some here in Arizona that are overpriced. I think those places are probably at risk. The major metropolises where people are moving to, I don't think that there's a lot. I think we could have a correction. Don't think we're going to have a crash. So I think we could correct 20%. We've already corrected a little bit. We're seeing some of it in our outlying areas. I don't think we're going to go below cost, which is what we did during the great financial crisis. Prices really, really dropped. And it depends really what the Federal Reserve is, what their agenda is going to be. I will tell you that our theme with our clients has been that the Federal Reserve is hiking into a declining economy. We thought that if they continued to hike, they would cause a recession. Our next theme was that if they raise interest rates in September, we would have a severe recession. They, of course, raised their rates 0.75%, not just a little bit. They did a lot. And we thought we'd have a severe recession. If they raise rates in October and November, we're going to have something that's beyond a recession. And here it is. You can see the data. Now, this is July. This is July's data that we're looking at. This is coming from the Case-Shiller, so it's very official. But it takes a little while to compile this. So it's a couple months behind. Actual 2.3% drop. Let me go to my very next slide here. So we still have year-over-year gains, year-over-year. So this is going back into September of 2021. We still have prices increasing, of course. Those increases are dropping. So instead of being 19% increase, now it's down to 16. That's because we had a 2.5% price decline. I think that this is going to accelerate as we go further, and we have some reasons for this. Now, this is good and bad. So if you're a first-time home buyer, this gives you an opportunity to go buy a place because a lot of people are out of the marketplace. Interest rates are exceeding it. So we've done a video on the fact that if you've got a good job stability, reserves, you have good income, you have a fairly secure income, that you should go ahead and consider buying a property because prices have dropped. Here in Phoenix, Arizona, we've got prices that have come down, 10, 15, 20% on some of them. But what we're seeing is we're seeing properties that have distress and they're sitting on the market and people start thinking that, boy, I got to get rid of this property. We didn't have that 6 or 9 months ago because within a week or 10 days, you'd have 4 or 5 or 6, 7 offers. Now those offers are going back to a normal market. Now here in Phoenix, Arizona, a normal market meant 89 days on the market before you sold your property. So that was a fairly long time. People would panic. If they're on the market 39 days, start reducing the prices. And we're here to take advantage of that panic. We have no problem helping someone out and offering less for their house. So we have no trouble doing that. We are capitalists. But if you're a first-time home buyer, you're going to get concessions. So this is really probably a reasonably good time for you to buy. Plus, we think rent's going to continue going up. So, if you don't own a home, you only have 2 choices. You're either going to rent or go buy a house. So we're suggesting to you that this may not be a bad time. A better time, of course, would have been 2 years ago, but we can't turn back the hands of time, so they say. But look at this. We're also seeing things improve on the new homes. Now, they were up almost 11 months of inventory. They were down 2.5 months. They had a really, really big selling season. Look at this. Look at this. They had a couple really down months for sure. We talked about that. And then boom. But I'm going to tell you what happened. Discounting. They're discounting these properties. They're discounting them down, $30,000 is pretty much average for some of this. And I'm going to say there's some hidden discounts too because they're getting some concessions because they're having to buy down some interest rates. So it could be easy 3, 4, 5% of additional concessions that are coming on these properties because the builders want to get rid of these properties. They built all these properties for buyers, taking them forever to get these houses up onto the market. And of course, now that they're getting to completion, the Federal Reserve has raised interest rates to really unsustainable levels for a lot of people. You thought your house payment was going to be $2,000 when you bought the house. Now it's going to be $3,500. Well, that's a shock for a lot of people, and they cannot afford it. Consequently, the builder gets the property back. Now they've got a spec. I'm going to tell you, kiss of death for a builder is having lots and lots of specs. They're not interested in doing that, so they will discount the property. So here's an opportunity for you as new homes. So I think there's going to be a lot of new homes coming to market, and a lot of the buyers that order these homes aren't going to be able to physically buy them. So we're going to have a little opportunity there as well. So I'm seeing lots and lots of opportunity into the marketplace. I think that's a good thing. But look at this. Here's the bad thing. Rates have gone up. Look at this. And I've been in business 50 years. I've been active all this time. I've been representing investors for years and years. I have never seen a spike of interest rates on Fannie Mae go like this ever. This is some kind of interest rate increase because we're talking right down here. This was under 3% a year ago. Well, under 3%. Even at the first of the year, we're still looking, like 3.25%. Now we're looking at 7.08% for a conventional fixed rate 30-year mortgage, and FHA's at 7%. Now this is strictly by the Federal Reserve. This is not a demand function where people, where all the buyers have been played out and the demand has stopped. This is absolutely coming from the Federal Reserve. They made an agenda to do this, to stop this. And I must tell you that people say, well, the economy is auto industry and the home industry run the economy. Well, let me tell you that the auto industry, it's about 3% to the economy. Home industry adds 17%. They're not even in the same category. Huge. Home industry is way over the defense industry. I think defense is like 5 or 6%. We're at 17%. So you really start damaging the real estate industry. The economy is going to suffer. You're going to see huge problems with the economy. When the real estate industry slows down, it really, really affects the economy. Let me go to my next slide. I don't want to make this a long one. I got this from Market Watch today. Look at this. Just look at this. So here we are today, the 27th of September, 2022, almost 4% on the 10-year Treasury. Within a hair's breadth of 4%. And right here, look at this. October 1st, 2021, we're 1.46% on a 10-year. Number one, if you bought that in October of last year, you just have had your head handed to you because you've lost a lot of money on your 10-year note. Not only that, but the 10-year regulates a lot of the other marketplaces, and we've had a huge, this has been a triple, right? So almost 3%, almost 3 times higher than we did 1 year ago, 2.5 times probably for this in 12 months. I've never seen a spike of interest rates like that. So remember, interest rates don't go up. No market goes straight up and come down. That's why I'm not panicking with the real estate market. We go up, we come down, we go up, and come down, just like any other marketplace. This isn't that terribly unusual. No one likes this. A lot of pain and stuff. People are angst, but I think we're just fine. However, if you've got a bond, then you might want to talk to your financial advisor, because if we do get an interest rate decline here, kind of if we get a little backup in interest rates, you might want to be able to either buy a property, because if you get a backup on interest rates, it'd be a great time for you to go out and snag one of these properties that are starting to get desperate, or to get rid of your bond portfolio. So let me just finish up here with my last slide, and we'll go from there. Now, look, I'm a broker here in Phoenix, Arizona with West USA. West USA is the parent company. They did $5.5 billion. There's a huge, huge corporation. They do our back office work. They keep us in compliance. If you need to reach me, you can always call me through the corporate office, or you can reach me at michael@michaeldouville.com. I'm more than happy to talk to you and your spouse and your financial advisor. Let's put our heads together, figure out something that really works for you. Because I don't see inflation going away. You're welcome to look back at my videos. If you like my videos, please subscribe. Really, really helps us. And I'm talking to Charles Nenner tomorrow, which is going to be another good video. You're certainly going to want to see that because it's going to be just chock full of really good information. So my best to you guys. Bye-bye now.